No commissions, no contract fees, and it starts right now. We're the only brokerage in Canada doing this.
Like Mike said, to kick things off, at wealhsimple, we have this radical philosophy about costs. We try to reduce them as much as possible. Costs are a huge drag on returns. The biggest, most successful investors in the world know this, and they get really nerdy about controlling them. But they can use their size to negotiate costs down. It's one way they find an advantage over everyone else. We want to give that same advantage to you. When we launched our self-directed platform, it was with no commission fees. We were the first in Canada to do that. Back then, the big banks charged as much as $10 per trade, and some of them still do today. Similarly, when we rolled out margin last year, we made sure to do it with lower rates than any Canadian bank. That's how we've saved traders more than $3 billion compared to what they'd pay at the Big Five. And it's why last year we added more accounts and saw more trading volume than any other online Canadian brokerage.
Before we move on from fees, there's one more thing I want to announce. A lot of you have told us that our crypto fees were just too high. Well, we listened, and we found a way to make our fees lower. From now on, the more you trade, the more you save, regardless of how much money you have invested with us. Our base fee will start at 2% for core clients and drop from there based on monthly trade volume. For our biggest traders, that means fees will drop as low as 0.05%, starting today.
Okay, so that's fees. The next thing we can help you control is information. Smart traders need the most up-to-date and accurate information available, and we are dedicated to giving that to you.
We've always used our tech to give you every possible advantage. That's led to a bunch of bold innovations that we were the first in Canada to introduce. Like Tara said, we were the first to bring you commission-free trades on Canadian and US stocks.
We built the first regulated crypto platform in Canada, too.
We were the first Canadian brokerage to offer 24/5 trading on US symbols.
And the first to offer fractional trades on US and Canadian stocks, making sure you don't leave a single penny on the sidelines.
And now we're using our tech to help you take advantage of all the information that's out there. We're making sure that you have the insights you need when you need them, and in a simple format that requires no extra effort from you. Let me show you what I mean. Say you want to find healthcare stocks with earnings calls in the next week. Right now, you could spend a bunch of time on Google, keep notes in a spreadsheet, but soon you'll just be able to type what you want into our search bar. Less than a second later, you have a list of qualifying tickers. If you need any more information on them, our AI can help. It can provide things like recent news, research expense summaries, or recaps of earnings reports. You can do this, you can click around and navigate or use our new hotkey features, which let you find stocks, place trades, and generally handle everything you need way faster and without touching your mouse. But for right now, we'll just click buy. Put in the number of shares you want, hit a couple more buttons, and that's it. You're invested. This thing is much more than a search bar. It's your investing command center.
So that's how we're making our platform pro level when it comes to fees and information. But if you want to operate in a complex market with a million ways to trade, you need the right tools.
Over the last year, we've rolled out a ton of new features to help you trade exactly the way you want to.
We recently launched real-time charts and our performance insights feature, which gives you a full portfolio view. It shows you everything from realized returns to deposits and earned dividends in one simple screen.
And there's still a ton more on the way. The first new feature I want to tell you about is something all of you have been asking for: secured puts. It'll be rolling. It'll be rolling out to all clients next month. Here's how it works. You click on each contract and you can see your P&L beside it. There's even a little description in plain language below. Along with secured puts, we'll bring you a bunch of other trading strategies, and they'll start showing up in the next couple of weeks.
We're talking about long strangles, long straddles, debit spreads, credit spreads, diagonals, calendar spreads, butterflies, iron condors, and Swap's favorite, the wheel.
I love the wheel. For anyone who may not know, the wheel is amazing. It's when you keep going back and forth between selling secured puts and covered calls on the same stock, collecting premiums each time.
And that's not even the coolest thing coming.
You're absolutely right. What I'm most excited about is something we have in the works. We're calling it AI research, and it's going to completely change the way you trade.
One of the most frustrating things about trading is waiting. You wait for news to break or for a stock to hit the right price. Whatever indicator you have set for yourself to know the exact moment to make a move. It takes a lot of time and attention.
Wealthsimple's AI research solves this problem. All you have to do is set the trigger. Any trigger you want, and our AI agent takes it from there. It can watch and send you an alert. It can explain the pros and cons of a strategy you've never tried before. And one day, it might even be able to take actions for you. Let me give you a real-world example. Say you want to buy the 50-day moving average on a particular stock. Instead of having to change the order every day, what if you can just set a single trade to execute every single time it hit? That's the power of AI research. And here's the best part. This is not some dream from 10 years from now. Our AI research tool will be released to a small group of traders in the next 2 months and will be available to every Wealthsimple trader early next year.
But before we go, Swap and I have one more big announcement to make. This is another one you have all been asking for and for a very long time. Has anyone here heard of Norbert's Gambit? I thought so. For people who might not be familiar, Norbert's Gambit is a trading strategy that drops your FX fees to basically zero. And we are bringing it to our most active traders in January. Now, does anyone in the crowd know how it works? You, sir, would you like to come on up and explain it to us?
Sure.
Everybody, please welcome Norbert. This is the actual Norbert Schlenker, the Norbert of Norbert's Gambit. We were so excited about introducing this feature that we thought we'd bring him here to celebrate today. Norbert, I know you don't love the spotlight, but would you mind explaining to the folks here how this works?
Sure. Hello, everybody. So, Norbert's Gambit is really a simple process. Any one of the smart Canadian investors that I first explained it to 25 years ago could have noticed and used it before I did. I was just the first person to discuss it in public. Then some smart aleck named it after me, and here we are. Financial institutions tend to make it difficult because they can and do charge 1, 2, even 3% to change Canadian dollars to US dollars, or vice versa. But all you need to do is find a stock that's listed on a US exchange and trades in US dollars, and also on a Canadian exchange that trades in Canadian dollars. It's not hard to do. There are hundreds of these stocks. First, you buy the stock in one currency, Then you journal the shares, which is jargon, sorry. It's an internal paper shuffle at your broker over to the other side so it can be traded in the other currency. And once that's done, you sell the stock in the other currency. It's magic. Instead of paying fat FX fees, you only pay the difference between the bid and the ask and 2 commissions. So here at Wealthsimple, they have 0 commissions. So you're paying the spread twice. What could cost you $1,500 if the broker did it for you will cost likely under $100. Sometimes it can cost 0. Sometimes you can make money. But I'm advising you to be careful. Was that clear enough, Tara?
That was amazing. Thank you so much. Let's hear it for Norbert. All right, that was a lot from Swap and me and Norbert. We announced our new pro-level trading tools. We slashed your costs even more than ever by introducing 0 commission options. And we introduced you to Norbert and his fee-saving gambit. In other words, we have kicked off a new era of trading in Canada. If you add all that stuff together, it will save traders hundreds, and some of you, many thousands of dollars each year.
Before we go, we do have one more favor to ask of you. We want to make Wealthsimple your favorite place to trade. And that means adding features you want the most. So right now, we're taking a poll that lets you vote on what comes next. It's live on our social channels, and if you're watching online, we'll put a link in the chat. We'll make sure whichever one wins gets built for you by the end of next year.
And for the next part of Wealthsimple Presents, we're going to be talking to investors who may not all want this stuff. People who may want sometimes for someone to nerd out on their behalf. We're going to hand things off to Polly and Brett to do just that. Thank you.
Hey everybody, I'm Brett Honeycutt. I'm a co-founder and chief product officer.
Yeah. Hi, I'm Polly. I'm the VP of design.
So today, Polly and I want to talk to you about a huge money problem in Canada, something that affects 7 million Canadians. And that problem is called mutual fund fees.
When we think back to how mutual funds started, they were actually a pretty revolutionary idea. Before mutual funds, it was really hard to build a portfolio. It was hard to invest at all. And if you could, you usually had to go through a really expensive broker. Then, in the 80s, mutual funds changed all of that. Suddenly, a whole new group of investors had access to the stock market. They could buy and sell shares of what was basically an instant portfolio. And people were excited. They were so excited that between 1990 and 2000, Canadians pumped hundreds of billions of dollars into mutual funds. After the bull market that followed, mutual funds were responsible for creating massive household wealth, which is a great thing. And that momentum has continued over the last 2 decades, because now Canadians have more than $2.4 trillion invested in mutual funds.
But over that same period of time, the world was changing. For one, ETFs were invented.
Invented in Canada, I should point out.
True. And ETFs gave people broad access to the market at a much, much lower cost. Plus, digital brokers like us took down a bunch of the other remaining barriers to investing. And so after that, mutual fund fees dropped around the world. They had to in order to stay competitive.
But not in Canada. Somehow, we Canadians are still paying some of the highest mutual fund fees anywhere, an average of 2% per year.
And you know, maybe that's because 2% doesn't really sound like all that much. Like, If I, for instance, gave you a 2% chance of running into a raccoon while you were taking out the garbage, you'd probably take those odds. But it's very different in the world of compound returns. And so I want to show you what that little 2% fee ends up costing you over the lifetime of investing. So let's look at two investors. The first investor has $100,000, and they put it into a mutual fund that charges them 2% per year. The second investor has the same $100,000, but pays only 0.5%, like you do with us. At first, the difference is pretty small, but over the 30 years, thanks to compounding and those fees, those fees and the effects on your portfolio really, really balloon. In this example, that extra 1.5% costs you $500,000. Or said another way, if you can lower your fees, you can boost your overall portfolio value by 50%. This is more than just an industry problem. It's a national problem.
And today, we're going to do something about it. We're going to help you say thank you and goodbye to those mutual funds and good riddance to those mutual fund fees.
Introducing the Mutual Fund Exchange.
We designed the Mutual Fund Exchange to be super simple. Just tell us which accounts you'd like to move over, and we're going to handle the rest. First, we'll show you how much money you'll be saving by exchanging your mutual funds for one of our portfolios. Then we're going to handle the move, and we'll cover any transfer fees that your old bank is charging you.
If you're worried about capital gains, well, we'll help you think through those. The good thing is that most Canadians hold most of their mutual funds in tax advantage accounts, which means that you won't actually have to pay taxes.
And after you move your money, we'll help you find the right portfolio to invest in. One that gives you similar broad exposure to the market, but of course, at a fraction of the cost. And most importantly, one with higher expected returns.
And that's precisely where our next announcement comes in. Today, we are really excited to share the future of wealhsimple portfolios. It's a new generation of managed investments that give everyone access to professional tools and strategies that used to be out of reach.
Introducing our new flagship portfolio, Summit. Summit is our boldest, most innovative portfolio yet, with deeper diversification, and for the first time ever, you get meaningful exposure to alternatives, like real estate, private equity, and private credit. It has the same philosophy as all of our other managed portfolios. We're still focused on low cost, diversification, and a long-term outlook. But with Summit, adding an even smarter mix of investments.
For decades, portfolios like this were reserved for institutional investors and the ultra-wealthy. But today, we're changing that. The Summit portfolio is rolling out to clients in beta starting today, and it's going to be available to everyone by the end of the year with a minimum investment of $10,000. Okay, so Polly and I want to talk to you about one more portfolio that we're going to launch today. And I think this one's going to be really appealing to you trading nerds. Introducing direct indexing.
I heard a yes to the crowd, some cheering.
I see a fan out there. All right, with direct indexing, you get the same market exposure as an ETF like SPY, but you actually own the underlying stocks. And why does that matter? Well, because it unlocks a strategy that smart investors have been using to unlock additional returns for their portfolios for decades, and that is tax loss harvesting. So a lot of you, of course, probably know what tax loss harvesting is. This is a day, of course, for investing nerds. So you probably also know how time-consuming that it can be. But the beauty of our direct indexing portfolio is that you don't have to do any of that work. We're going to do it for you.
So here's how it works. First, you choose the market that you want to track. You can choose between the Canadian market or the US market. Once you've picked, you'll be invested in a representative sample of that index, meaning you get nearly identical performance without needing to own every single stock. That lets you track the index while still being able to take advantage of what Brett mentioned, tax loss harvesting. So say you choose to track the US index. If the price of Walmart drops, we'll sell it for you at a loss, which can be used to offset any taxable gains. Then we'll immediately replace your position in Walmart with a similar company. for example, Target, so your exposure stays unchanged. Basically turns a drawdown into a future asset.
Tax loss harvesting can boost your annual returns by up to 0.5 percentage point per year. And what does that mean in real, tangible numbers? Well, for every $50,000 that you invest, over a 10-year period, you can expect about $8,000 in extra returns. That's not bad for doing nothing.
So that's a glimpse into our new portfolios, which get you 2 of the 3 key things that Mike mentioned at the beginning for building wealth: low fees and access to broad diversification.
Okay, so this next feature is for those of you who want a bit more of the human touch, your own personal nerd, if you will, always in your corner and always on call. Dedicated advisors can help you think through the tough stuff that gets even more complicated as you near retirement and your portfolio gets more complicated. Things that are not that easy for the average investor to understand, much less optimize, like portfolio adjustments and the optimal drawdown strategy and estate planning.
The ultra-wealthy have entire teams of people working for them to do just this. And now you can have the same at Wealthsimple, because today we're introducing full-service wealth management. At the big banks and family offices, you need millions of dollars in assets just to qualify for this type of gold glove service. But we realized we could use technology to offer the same level of service to a much broader group of Canadians. And of course, we can do it better. So here at Wealthsimple, you get a fully personalized service. Your advisor is constantly working in the background to optimize your wealth. So when they notice an opportunity, they're going to contact you right away. So say you get a bonus, they're going to make sure you're invested in the smartest way. Or if you are losing track of your RRSP contributions because you have multiple accounts, sends you over the limit, your advisor's going to flag that, redirect the money so you don't get penalized. You're also going to get personal access. Instead of playing phone tag with your current wealth manager, here at Wealthsimple, soon you'll be able to just send a text anytime. So, say you're thinking about how much you want to spend on vacation without blowing the budget, your advisor can help.
Does anyone want to go to the Azores?
I do,
okay.
Yes. Dreaming about retiring early or stretching the home buying budget, your advisor can help with that too.
You know, Polly, when you see something that you like, you got to act fast.
That's right. Say you want World Series tickets, or maybe you want a pony. You should probably talk to your advisor before you make that purchase.
I'm pretty sure that Jay's tickets are going to be more popular this week.
That's right, yeah. Okay, so this isn't Jay's tickets, but right now we'll give any wealth management client a 1% match on any money you transfer to Wealthsimple. Think of it as us really putting our money where our mouth is when it comes to getting you free of those mutual funds, and maybe even onto your very own pony or at the World Series.
Go Jays. So how much does this cost? Well, we charge 0.9% all in. And as you build wealth, the number drops to as low as 0.5%, which is less than half of what you'll find with a traditional financial advisor.
Okay, so now we've talked about the future of trading in Canada and the death of the robo-advisor. Next up, Paul is going to talk about how we've all been investing backwards and how fixing that mistake could supercharge your retirement.
Hi, everybody. I'm Paul. I'm actually a nerd. I'm the Chief Commercial Officer at Wealthsimple. So far, we've shown you how we're solving for 2 of the roadblocks the traditional financial system puts up by giving you low fees and more access. Next, I want to talk about how we're helping you find smart ways to take advantage of the 3rd investing pillar Mike talked about, calculated risk. In this case, the calculated risk comes from leverage. Let's talk about how Canadians have historically built wealth. For many of us and our parents, the path was clear: buy a home. They saved up for a down payment, borrowed an intimidating amount from the bank, then waited to benefit from decades of growth. And it really worked. They used someone else's money to grow their own. Unfortunately, that path is no longer viable for a lot of young Canadians. I hear about this at almost every client event. Last week, I spoke with a client named Ava. She's doing all the right things. She's using an FHSA. She's saving as much as she can from her paycheck. She's working really hard. But she says it still feels like she'll never be able to own a home. When you look at the numbers, you can see why. In 1980, houses cost about 3 times the average person's salary. By last year, that number had jumped to 7 times. 7 times the average salary. That means a lot of people will miss out on the benefits of one of the most traditional forms of leverage, the mortgage, and the wealth building that comes with it. So we started thinking, what if there was another way for people to build wealth with leverage? Instead of financing their home, what if they financed their retirement? Introducing the Retirement Accelerator. A lot of what we're building is based on an interesting theory developed by a couple of Yale professors we've partnered with. Their theory is called life cycle investing, and the gist is pretty simple. We have been doing things backwards. We invest the most money later in life when it has the least amount of time to grow. Not only does it limit the size of your portfolio, it puts enormous pressure on those final years of saving. If a downturn hits, you have no time to recover. All those vacations you planned on taking in retirement, suddenly they turn to staycations. But imagine if you could get access to your money earlier, do it responsibly, and you can unlock decades of potential growth. That's the insight behind the Retirement Accelerator. Because this is such a new way for Canadians to invest, and because it involves borrowing money that you wouldn't otherwise have access to for many years, we want to be smart about how we roll this out. We're starting small at first. We'll be using the Retirement Accelerator to help investors borrow the money they need to take full advantage of their annual RSP contributions. Why? Well, there's 2 reasons. 1, maximizing your RSP contribution lets you maximize your tax savings. 2, it also stops you from falling into a spiral of missed opportunity. Contribution room may move forward every year, but the time you would have gotten in market doesn't, and that can really cost you. Missed RSP contributions are a huge problem, especially for young Canadians. Let's look at some of the data. Only 22% of Canadians between 25 and 34 make contributions to their RSPs. And those who do contribute don't max things out. The median amount saved is only about 60% of total contribution room. This is where the missed opportunity cost comes in and where the Retirement Accelerator can make a huge difference. So let's say you make about $100,000 a year. If you maxed out your contribution on the first day of the year, as opposed to the deadline when many of us contribute, including myself, with the Retirement Accelerator, in only 20 years, you'll have nearly $1 million saved. But if you're one of those people who invest only 60% of your max at the last minute, that number shrinks to just under $600,000 or 40% less. With our Retirement Accelerator, you are in full control. You decide how much to borrow. We'll actually help you out with that part because the math can get kind of complicated. And then you decide how quickly you pay the loan back. So the terms are your terms, and the timeline is your timeline. It's yet another example of how we're giving our clients access to the same types of tools and advantages that wealthy investors have had for generations. And with that, we're down to the last part of today's presentation, and definitely my favorite. We've been working on this for a long time, and are excited to finally share it with you. Based on the Reddit threads, some of you impressively sniffed this out a few weeks ago, but for everyone else, here it is. Starting today, we're completely changing the way you can buy and store gold. For anybody who slept through the last couple of years and didn't notice, or for those clients who kept asking me why we even have gold in our portfolios, I know who you are. I want to give you a little context here. Gold has been on a tear. It's up more than 100% in the last 2 years, which means a lot of people are interested in trading it. When you bought gold before, it was usually through an ETF, which is fine. We like ETFs here. It's very convenient, but it also comes with extra fees. And if you want to actually own real gold, you're usually out of luck. But not anymore. We've built the most accessible gold trading platform in Canada. We're putting one of the oldest forms of money where it belongs, a modern marketplace. You can trade real gold 24 hours a day, 7 days a week, with as little as $1. And all, thank you. And all for the lowest fees in Canada. And it goes live to everyone today, like right now, at this very moment. We're gonna drop a link in the live stream chat for anyone who wants to be the first to check it out, but I'm actually gonna show you how easy it is to trade gold. So I'm gonna log on to the wealhsimple app, and I'm gonna search for gold. I can right away see the price of gold. I can see the trend of that price over time, and I'm going to buy me some gold. Now, you can do that in dollars, or you can also do that in ounces. I'm going to buy $10,000. Review my order. Submit that. And that's it. We're done. I own gold. And we're going to store it for you absolutely for free. That was really easy, right? But we actually wanted to do more. We know a lot of you want to actually hold your old gold, like actually have it in your possession. Well, now you can. We minted our own pure gold coins, and in a couple weeks you can buy them. Let me show you how to do that. So I'm now on gold again. I'm going to click Get Gold Coins. And now, based on the amount of gold I've purchased, I can redeem that gold in either 1 ounce gold coins or 1/10 ounce gold coins. And I'm going to go buy 1 ounce, get back 2 1/10 ounce coins, review that order, make sure you check the shipping details, confirm that, and that's it. In 1 to 2 weeks, that gold will be shipped right to me. Now, does anyone want to see one of these coins? There you go. This is a 1 ounce $5,000 coin. And I'm super excited. If you haven't held one of these before, they're pretty heavy. They're pretty amazing. Oh, wait, I shouldn't leave that there. Mike talked about the importance of access when it comes to building wealth. And this is our way of making something that many people see as a vital component of smart portfolios accessible to every single investor who wants it. If you want one of these coins, you'll be able to buy them in November, but there's also another way. Next month, we'll be giving away a bunch of coins, along with a huge 1 kilo gold bar and other gold prizes. Keep your eyes on the app and our social channels for more details. In case that's not enough to get you excited, we're also waiving trading fees on the first $50 million of gold bought or sold in the app. That makes it even easier to move over any money you have in gold ETFs and start saving 0.5% a year. Now, as a lover of dad jokes, and I am a lover of dad jokes, it's hard for me not to say something about a gold rush right now. But I would act fast if you're interested. That's it for us today. Thank you to everyone who came out or tuned in. We hope you're as excited about these revolutionary new changes and offerings as we are. As a special thank you for being part of this event, we're giving every one of you, whether you're here with us in Toronto or watching live online, first access to the new products and features we announced. If you registered to attend today or do it through the link in the chat, you'll be one of the first to know when these features drop. You'll also be the first to try out advanced options, AI research, the retirement accelerator, and more. Thanks again for being with us. Keep it simple. And go Jays! Go Jays!